Hey everybody, Chuck Barone. Monday, May the 1st, here we go, a brand new month of crazy, 2023. What a wild day we had today, guys. I'm sure some of you guys have heard the news. Situation keeps getting funkier. Before we start though, as always, want to welcome everybody to the show. We appreciate you guys watching these videos, what you guys do every day. Keeps us going. We appreciate you guys' support. Okay, so let's talk about these markets today. Stock market down today. The big news, of course, you guys heard about Republic Bank. So taking stocks down with it, nothing dramatic. Actually, we're up most of the day, finishing the day down and selling off at the end. The Dow falling 46 points, 34,051 on the Dow. The S&P down just 1 point, 4,167. The NASDAQ down 14 points, 12,212. Everybody holding their breath. Okay, great. Republic Bank gets taken over. Second biggest bank failure in the history of the U.S. JP Morgan looks like comes in as the good guy. So the market goes, oh, okay, well, this is no big deal then. Move on. Okay, I don't really think that's the case. We'll talk a little more about that later. Bonds today selling off, yields up pretty nicely. Yields on 10-year up 12 basis points, 3.57%. The 2-year, 4.15%, up 8 basis points today. Rates back on the way up. We know we got a rate increase coming later this week. We'll talk about that later too. So bond market, I guess they're off this recession now. I don't know. The bond market whipsawing all around. It's a crazy time in bonds. So we'll see, guys. We'll see. The dollar today up nicely, up more about a half a point, 102.35%. Okay, go dollar. Dollar's back above 102. Let's see if it can stay. As a result of a strong dollar, gold and silver selling off today. Gold down $10.80, $1,979.80 per ounce. Silver off 13 cents at $24.91. Still pretty good numbers. I think that a year ago people would have said if gold was going to be $19.79, people would have said, okay, that's good. Silver $24.91, okay, that's good. These gold and silver, I tell you guys, still have room for the upside. They're going to go up higher than this. Holding their own at these levels, in spite of all the news we're getting, gold and silver doing well. Oil today, well, I got to say, I've been right about oil lately. Down again today, $1.07 per barrel, $75.71. Now getting to the bottom of that $75 to $80 trough that it kind of been trading in. It's had a couple spikes above, but it looks like oil right now, the trend is down. We'll see if it can hold 75. If it doesn't, we're going to get into the next tranche lower between 70 and 75. It'll get in trading into there. I think oil right now, if I was to speculate on oil, I would say it's going down. Bitcoin, Bitcoin, not a good day for Bitcoin today, down $1,346, 27,930. Bitcoin holding pretty strong support, but having some difficulty busting above and staying above 30,000. Still looking good though, guys. Bitcoin holding its own. I think that the market for Bitcoin is people are starting to understand that it's not going away. So people even like me, skeptics, especially at first, starting to do their homework, learn a little bit more about other Bitcoin and other cryptos. So I think if people learn more about it, obviously the more widespread it'll get, more interest in it, good for Bitcoin. News this week, okay? Like I do every Monday, I give you guys a little bit of a foreshadowing of what we're going to be dealing with this week. The news that we're going to be getting, the reports we'll be looking at this week. So today we got the ISM Manufacturing Index. Did not come in good. Manufacturing looked like it's moving toward recession. Tomorrow, the Fed meeting starts. Everybody knows this, right? Tomorrow and Wednesday, open market committee meeting. Culminating Wednesday at another quarter-point increase. Also, tomorrow we will get factory orders, which are also expected to be down, showing weakness in manufacturing. On Wednesday, we'll get, that's Jerome Powell Day. St. Jerome will be out talking to the press, scaring the crap out of the markets, I'm guessing. We'll get that quarter-point rate increase. We've been expecting that. It's been, I got to say one thing about Powell. There really hasn't been much surprise. He's told us what he's going to do. This will be the 10th consecutive open market committee meeting with a rate hike. The market's going to be, that's kind of already baked into the cake. But what everybody's going to be paying attention to on Wednesday is Powell's comments after the meeting. We're going to be, markets are going to be looking for guidance. Now, I'm sure they're going to talk about there will be no rate cuts this year. The market is already pricing in 2 rate cuts later this year. So we'll see. There's going to be a little bit of friction there, I'm sure. I'm sure they're going to talk about pausing now to see where these rate hikes have gotten us, right? And it's going to be fascinating Wednesday listening to Powell stuff. On Thursday, another big day, we'll get jobless claims. That's always going to set the Fed off one way or the other. Well, those are expected to be higher. They're expected to be 240,000. U.S. productivity numbers, we're expecting those to be higher. The trade deficit, those will also be higher. And unit labor costs. Now, this is the one with jobless claims. The Fed's going to be looking at this unit labor costs because that tells them the cost of labor. That's inflationary. So that's going to be one they're going to pay attention to. Then Friday, to cap the week, we'll get the new unemployment rate. It's expected to rise to 3.6%. And we'll also get consumer credit numbers. They're expecting consumer credit last month to have gone up. Are you ready for this, guys? $16.8 billion in consumer credit. These are not people watching this show, right? I mean, people in the face of these rates going further into debt, man. Yikes, not good. Okay, news you guys need today. Here we go. So it starts today with Republic Bank before the market even opened. Regulators rushing in to seize Republic Bank. The news comes, here comes JP Morgan. They're the white knight in the picture. They're going to buy up the assets of Republic Bank. I looked everywhere. I saw 25 articles about JP Morgan going to buy up Republic Bank. Did not see one that talked at all about what were they buying, how much were they paying. I'll tell you one thing they're not doing. They're not paying shareholders. The shareholders are zeroed out. So if you're holding Republic Bank shares, if your mutual funds are holding those, toast, zero. This was a stock that was $170 a year ago. Zero. JP Morgan, when they don't even talk about the terms, I can tell you how it's going to go down. They're going to pay pennies on the dollar for Republic Bank's best assets. They're going to buy the stuff that's going to make JP Morgan stronger and make them more money. And whatever crap is left, because that's all it'll be, the bones picked clean, guess who gets that? Us. Schmuckatellis. We get all the fun stuff. The taxpayer will pick up the tab for the rest of it. I'm sure they're going to come out and tell everybody that their deposits are safe, whether they're beyond the FDIC insurance limit or not. This is the really bad news for the banking sector. We know that there's big trouble. Republic's huge. Big bank, man. Second largest bank failure in the history of the country, guys. Bad. But it's still a gift for the big banks. I told you guys this on Thursday when we were wrapping up the show. I predicted Republic Bank wouldn't last much longer and somebody was going to swoop in and get it. And that's what's going to happen to the rest of these regionals too, I'm guessing. Maybe a few of the super strong ones, U.S. Bank or some of the bigger ones might be able to survive. But the bigs are going to come in and swoop them up for no money. And the taxpayers, us, the dumbasses, we're going to get the bills for all this crap. It's just as bad as it can get, man. Now this banking crisis, guys, they're trying to make it like it's gone away. It hasn't. It's only going to get way, 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 way worse. See, 2008 was a big real estate crash. It was all residential because we all live in houses, whether we own them or we rent them. This was something everybody dealt with. This time around, it's commercial real estate, guys. You know, the office buildings, the malls, the strip malls, every little, where commercial business is done. Check this out. $2.5 trillion in commercial bank loans coming due in the next 5 years. That's 500, if you just average it out, it's $500 billion a year in loans that are going to have to find a home, be rolled over. Now, the problem they're going to have is these commercial buildings are all empty. Nobody wants to go back to the building. People have been working from home since the pandemic. They found that their productivity does not suffer. Nobody wants to go back with the commutes, hours in their cars. So commercial buildings in trouble because the tenants aren't there. Now they're going to be dealing with interest rates dramatically higher. Default's going to spike like crazy. Well, guess what? Most of the loans on commercial real estate are done by these regional banks. So it's going to just make all of it 10 times worse. Commercial banking is going to flake, completely crater. There's a big commercial real estate crash coming any second now. It's already started, but now it's really going to accelerate. You got scared banks. You got rates that are high and not coming down. Disaster looming. 3 of the 4 biggest bank failures in the history of the United States have happened since March. The biggest one ever, Washington Mutual, was real estate related too back in 2008. Bad news for banking, guys. Be extra cautious. Fed decision coming this week. We know on Wednesday we're going to get Powell at the microphone. They will have raised rates. It will bring the federal funds rate to 5.1%, as they've been telling us all along. They want to get that rate above 5%. That would be the highest the Fed funds rate's been in 16 years, since before the 2008 kablooey. Right now, though, the Fed's going to be they're going to have their moment coming here soon, because the economy looking increasingly shaky. The economy not looking healthy right now. Raising rates in the face of a recession going to make the economy worse. Powell's going to have to be dealing with it. He's going to have his choice. You're going to pivot, lower rates, save the economy, or you're going to fight inflation, keep rates high. I'm telling you, this inflation is not going to go away like magically. We know we're in the fight for this stuff. Recession is what they've been wanting all along. Don't you guys get spooked by this. We've been telling you this is coming. We've been telling you that's why they raise rates. We've been telling you higher interest rates don't do anything for inflation. The recession higher interest rates does something, right? So this is all coming, guys. This is all coming. We know now. This is for real, right? And here's the thing. Us, the middle class, we got to get our head out of our own asses, guys, okay? The corporate overlords and the moneyed interests in this country, they run everything. We want to think it's red team, blue team, Senate, Congress, president. These are the paid yo-yos of the real money, the people calling the real shots, man. They're the ones that are big benefactors of all this craziness, these wild market swings. Every time Schmuckatelli loses money, they make money. Real estate going to crash, they're going to swoop in and buy it all. Regional banks, wait till we see the terms. You're going to see it's going to, sooner or later, they're going to have to release some of the terms JP Morgan got on this deal. And you're going to see they stole it. And that's the way this thing always goes, man. We need to say something. We need to do something. Because they distract us with nonsense while they're pilfering, robbing us blind. While we're fighting about guns and abortions, they're stealing billions and billions and billions and billions of dollars from us. And it's time to end that now. Americans, man, our money, before all this nonsense, let's get the basics right first. Then let's go back to fighting about social stuff. In the meantime, let's get our house in order, man. Anyway, guys, follow our advice. Save your money. Invest conservatively. Don't take on new debt. Spend your money judiciously. Be thoughtful. Don't do impulsive things with your money. Not only don't take on new debt, even if you're paying it down $10 extra a month, chip away at the existing debt you have if you possibly can. These are the basics, the foundation of wealth. This is how you get started. Learning to live within your means. Paying down debt. Anyway, the video's getting long. We'll be back tomorrow. We're going to have a whole bunch of new stuff coming for you guys. The show's about to be new and improved, so keep on with us. You're going to be glad you did. Tomorrow, big news coming. We'll get prepped for Wednesday's rate hike. Until tomorrow, guys, have a great evening. Hope you had a good weekend. We'll be back tomorrow to bring you what you need. Till then, take care. Thanks.